And now for a Next News special report.
And now we're peeling back the curtain on a story the big networks won't touch. Imagine America's banking giants, JPMorgan Chase, Bank of America, Wells Fargo, all in the crosshairs of a financial crisis reminiscent of 2008. Moody's has downgraded their ratings, and this isn't just Wall Street jargon. It's a red alert for Main Street. Your money, your mortgage, your future, all hanging in the balance as these titans wobble. Think it won't affect you? Think again. We're diving deep into the seismic shift in the financial landscape, and stay tuned for my final thought where I'll connect the dots on why this banking turmoil is not just news, but a wake-up call for every American. This is not just another news report. It's a crucial insight into the future of your financial security, so do not miss a moment. Now, before diving into our report, a shout out to our sponsors enabling our top-notch daily news. Ground News, combating low media trust, offers a revolutionary app and website. This is really a cool website. It exposes the biases in the breaking news. You guys are news junkies. You come to this channel for a reason. This new app and website is going to change the game for you. Now, it aligns stories on the political spectrum, allowing comparisons of headlines to discern emphasis and omissions, thus revealing the truth behind the narratives. Ground News features a unique blind spot feed. It highlights stories neglected by certain political sides. For instance, they revealed how 73% of the coverage on Trump's lead over Biden came from right-leaning sources, a fact overlooked by the left. Now, this highlights the app's importance in uncovering such critical information. With the 2024 election approaching, Ground News ensures that you're well informed. So subscribe at ground.news/nextnews for a 40% discount on unlimited access, or simply tap more below. Support transparent media and stay updated with Ground News. Now, America's banking giants, JPMorgan Chase, Bank of America, and Wells Fargo are facing a serious challenge as Moody's Investors Service downgrades their ratings. The situation echoes the 2008 financial crisis and signals potential trouble ahead for our economic system. In recent months, we've witnessed numerous banking glitches, widespread branch closures, and significant layoffs. These banks are now tightening their belts, sitting on billions in unrealized losses. It's a clear sign of trouble brewing in the heart of our financial system. Now, the downgrade by Moody's is a major red flag. It reflects growing concerns about the financial health of these banks and points to a diminishing capacity of the U.S. government to bail out these institutions if needed. Particularly concerning is JP Morgan's situation, where its complex capital market activities pose substantial risks to its stability. And surprisingly, this significant news has received scant attention from the major networks. This lack of coverage is alarming, as the implications of these downgrades affect not just Wall Street, but also Main Street. The federal government's weakening financial position complicates matters even further. With national debt escalating, the government's ability to support the banking system in times of crisis is increasingly uncertain. Now, this is more than just an economic issue. It's a matter of national security and stability. Consumer confidence in the banking system still seems relatively stable, but the signs of distress are evident. The Federal Reserve reports a rise in credit rejection rates, indicating a tightening credit environment. Now, this credit crunch signals challenging times ahead, especially in the housing market, where we're witnessing a significant decline in home sales since the lowest of 2010. Wells Fargo's recent spree of branch closures is a testament to the changing landscape of banking, reflecting deeper financial challenges. Nearly 40 branches were closed in a week, with Wells Fargo leading the pack. This retreat from physical banking is an alarming trend that signifies even deeper financial problems. The economic squeeze is evident in the retail sector as well. Major retailers like Best Buy, Lowe's, and Kohl's are bracing for a tough holiday season with expected drops in sales. This decline in consumer spending is a clear indicator that Americans are feeling the pinch of the current economic situation. And the widening wealth gap is another concerning trend. The bottom 80% of income earners are increasingly getting poorer, a situation that's been worsening over the years. This growing disparity is a serious concern for the stability and prosperity of our society. As we look towards 2024, the forecast does appear grim. The banking sector's troubles are likely to intensify, putting additional strain on an already fragile economic system. Our financial institutions and the economy at large seem ill-prepared to handle such stress. The current situation bears a striking resemblance to the 2008 financial crisis. The same indicators are present: a tightening credit market, declining home sales, and reduced consumer spending. This repeating cycle of economic hardship is the cause for concern. And the role of the media in this scenario is crucial. It's essential that these developments in the banking sector are brought to the public's attention. Ignoring these warning signs is not only irresponsible, but also potentially hazardous to the economic well-being of the nation. And the Federal Reserve's policy decisions will be critical in managing this crisis. Their actions regarding interest rates and monetary policy will significantly impact the banking sector and the overall economy. In these uncertain times, financial literacy becomes even more crucial. Understanding the basics of banking, credit and investment can empower individuals to make more informed decisions about their personal finances. Staying informed is crucial in these times of economic uncertainty. By subscribing, you're taking a step towards understanding the complexities of our financial system and how it impacts your life. So if you got value from this report, tap subscribe to stay updated on these critical developments. Now, as we close tonight's report, let's reflect on why this story matters deeply to every American. The downgrades of JPMorgan Chase, Bank of America, and Wells Fargo aren't just financial jargon. They're harbingers of a potential economic storm that could impact every single one of us. This isn't about distant corporations. It's about your savings, your mortgage, and your financial future. In a republic like ours, the health of our financial institutions is intertwined with our national well-being. When they falter, it's not just an economic downturn. It's a challenge to the core of our American life. The silence from major networks on this issue is not just troubling, it's a disservice to the public. So it's essential that we remain vigilant, informed, and proactive. As we face these uncertain economic times, remember, knowledge is your best defense. Stay informed, stay prepared, and keep holding those in power accountable.
Congratulations, you made it to the end of the video. Now keep up your quest for truth with this next news report. And if you found our channel enlightening, join the millions who agree with you. Tap subscribe. Thank you for watching the Next News Network.